Ladies and gentlemen, welcome to the Ethereum Exterminator. So this is the strategy for Ethereum. We've already talked about the Bitcoin Assassinator. I would say the ETH Exterminator is probably a little bit more risky, only slightly. What I mean by that is in the design process and how it is designed. We don't have as much in terms of history, so out of sample testing. So you saw in the Bitcoin Assassinator, we went as far back as 2011. I think Ethereum, we can only go as far back as 2015. So there's a few things which make it slightly more risky, as well as, it is a newer coin or asset, and therefore slightly more volatile, but overall not that big of a difference. The other thing I think to note is if you have a look at the net profit here, so what's this? This is a 100x since 2018. And if you compare that to the Bitcoin Assassinator since 2018, it's about a 20x. So probably more profitable. Obviously, these are back-tested results mostly. That doesn't necessarily mean that's what we're going to get in the future. And we don't want to speculate on price. We don't actually know what's going to happen to Ethereum and Bitcoin. Now, if you look at the likelihood, a lot of people talk about 5 to 10,000 Ethereum price eventually. And then Bitcoin, we know, has already hit 60,000 US. Maybe it'll go higher. So it's likely that Ethereum will probably go up more than Bitcoin. So you'll probably make more money investing in Ethereum than you would in Bitcoin. But what I personally do is I invest in both. Now, I'm just going to go through the ETH Exterminator itself. As you can see, there are more trades than there are in the Bitcoin one. And there are periods like this, if you have a look here. So kind of told you buy, sell, buy, sell. The trend was unclear, actually. So you might be a bit more active. This is going back to when the FTX crash happened. So the big exchange FTX crashed, and then it told you to sell. So that was the massive drop here. So let's look at this. So first of all, front tested results. So specific results from Jan 23, completely real results. So it told us to buy, sell, excellent. That was the right decision. Buy, sell, again, right decision. So it's doing quite well already. So what we want to do is look at the drawdown. So slightly higher drawdown than the Bitcoin one. And again, that's a different calculation. I think this is more accurate. And then if you look at the percentage profitable, so it's right over half the time, 50% of the time, it's correct. So say, for example, telling you buy here and sell there, that was the right trade. That was the correct decision. If it told you to buy here and sell here, that's obviously an incorrect decision. Obviously, that didn't happen here. So one interesting concept to know is that you can have a percentage profitable of 40% and still have an incredibly profitable strategy. The percentage profitable does not have to be above 50% for you to make a lot of money. What this is useful for is your own psychology. If you see that, okay, you were wrong, you were wrong, you were wrong, you were wrong, and then you were right. So it's kind of like over time you might lose trust in the strategy. That's why this is helpful, and you kind of want it around 50 or above, preferably as high as possible. But you don't want to overfit the data. So I could make this much better, in the 80s, but at the risk of overfitting, which basically the definition of overfitting is when you fit the data too well, where you're not actually identifying any real pattern, you're just basically plotting the curve. So it'll end up being like buy, sell, like buy right at the bottom, sell here. You're just fitting the curve. But what you want to do is get a general grasp of the trend. That's what we're trying to do here. We don't have to be right all of the time. We just have to be more right than we are wrong. So let me show you this super interesting fact here as well. So all these trades that have happened, look at this beautiful equity curve. Look how much money you've made over time if you had put money into this back in 2018. Look what happens if you bought and held. So you buy here and you held, and you didn't sell, you held all the way. What difference is this? How much of a difference is this really in ETH? So Bitcoin did a bit better in this, if you remember. Bitcoin, you know, held its value. But look at ETH. If you didn't sell like up there or up there, you know, look what would have happened. So this is exactly why you need an investing tool like this, a strategy like this, because this trumps, absolutely trumps buy and hold investing, and just takes the decision making out of it. All you have to do is buy and sell. Buy and sell. It's not that complicated. Anyway, so let's go back in time. So remember, again, this is 2018. Watch all of this. Watch the max drawdown. Watch the percentage profitable, and watch the net profit. So we go back to 2017. Already improved significantly. 2016. And finally 2015. So at 2015, the profits have gone up significantly. The drawdown is a little bit worse, but still we'll happily accept a 26-27% drawdown in your equity curve in comparison to an 80-90%, or you just saw that buy and hold curve, right? So that's really not that bad. The percentage profitable has dropped slightly under 50%. Again, it doesn't really matter. The percentage profitable, you can have 40% on the dot and still make massive profits. But this proves that, again, this strategy was built from using data from 2018 to 2022, and it works in the future. So it's working right now in 2023, but it also works in the past. It makes you money all the time. This is why you need to use a strategy in your investing.